This is an introductory video of the simple, easy, and objective trading system. And in this video, we're going to cover the three essentials, the basics, the three concepts or underlying concepts that make the SEO trading system work. And these are the breakout bands, a change in momentum, and the 5-day high-low price. And the first thing we'll cover are the breakout bands. And the breakout bands are three moving averages, a long, a medium, and a short, and they're offset forward in time. For daily bars, we use the 13, the 8, and the 5. For 130-minute bars, we use a combination of 21, 13, and 8. And for 65-minute bars, we use the 34, 21, and 13. And this is an example of a chart. This is a daily chart of the SPY with the breakout bands in place. And when price is above and clear of the breakout bands, then the stock is undergoing or is in a bullish move. Conversely, when price is below and clear of the breakout bands, it's in a bearish move or trend. So we can see from this that the most elementary concept is that when price is above and clear of the breakout bands, you want to be long. And when price is below and clear of the breakout bands, you want to be short, or at a minimum, not long. The second essential concept is momentum. And for momentum, we use a 534 MACD, also called a Elliott oscillator. And we've colored histogram bars blue and orange because color experts and psychological studies suggest that this high contrast color combination is psychologically neutral. Other software would probably color these histogram bars as red and green, but again, as the studies suggest, that creates an emotional, if not subconscious, bias and creates certain expectations that are best avoided. And that's the reason for the blue and orange bars. Now, what momentum provides us with is an alert, because we're not so much interested in momentum as in a change in momentum. And a change in momentum provides an alert. And we can see the changes in momentum very easily because the histogram bars change color. Blue is upward or increasing momentum, and orange is downward or decreasing momentum. And when the histogram bars change color from blue to orange or orange to blue, we can see immediately and at a glance that a change in momentum has occurred. And a change in momentum is an alert. Now, an alert is not an entry signal, and not every alert will result in an entry signal, but the alert tees up the ball, so to speak, so that we can decide if we want to take further action because our conditions are getting into place. The third concept that we have to understand is the 5-bar high-low breakout price. And simply put, a 5-bar high-low breakout price would represent a bar, and if it's a high breakout price bar, that the high price of the 2 bars immediately preceding it and the 2 bars immediately following it have lower highs. And for a low breakout price bar, the low of the 2 bars immediately preceding it and the low of the 2 bars immediately following it have higher lows. So that's the basic concept of a high-low breakout price bar. And if we put together the three essential elements, we can define a 3-step entry process where we have a change in momentum, that's the alert, and we have current price exceeding a 5-bar breakout price, and a new essential, the entry bar price is clear of the breakout bands. Because remember, we said that if it's above and clear, it's bullish. If it's below and clear, it's bearish. And here's an example of putting all three elements in place and putting them together. Number one, we had an alert. We had a change in momentum. In this case, from down to up, orange to blue. And when the change in momentum occurs, we follow that momentum bar up, locate the immediately or the first immediately preceding breakout price bar, and we note the high price. Now, we do nothing until price breaks out above the high of the breakout price bar. And if it's clear of the breakout bands, then we have a valid entry signal. Now in this video, we're not covering stops or exits, simply the basic elements of entry. This is an example of a long entry, and this would be an example of a short entry. Number one, we had the alert, a change in momentum. In this case, we had it from up to down, blue to orange. We followed it up, located the first immediately preceding breakout price bar, noted the price, and then when current price dipped below the bearish breakout price, that indicated a short entry signal. And it was valid because the breakout occurred clear of the bands, and that's the basic definition of a valid entry signal. So let's just go back and review the three essentials. We have a change in momentum, and price exceeds the 5 breakout price, or the 5-bar breakout price, and the entry bar price is clear of the breakout bands. Three simple concepts, you put them together, and you have the essential elements of a very powerful trading system that is indeed simple, easy, and objective, and is just about guaranteed to keep you on the right side of the market on every major move. Now, in future videos, we'll go into each of these elements in more detail and provide greater examples, but it's essential that you understand the basics.